As it stands, gold prices are on for its second consecutive month of downside, with potentially May being the worst performing month of the year so far for the precious metal. Welcome to our market analysis videos here at Zenfodex. For those who are new to the channel, my name is Connor and I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. This is part 2 of the Zenfodex monthly forecast, and today we will look at the gold market in detail. During this video, I'll provide to you a clear fundamental and technical analysis which can hopefully aid your gold trading throughout June. Enjoy. So it very much feels like the mood of the markets is quite set right now, actually, and it's quite a gloomy one. In fairness to gold, in relative terms, it hasn't performed that badly when you look at stocks and cryptocurrencies throughout May. But for me, the clearest bear factor in play right now is the US dollar. And it's no surprise that the dollar has actually softened towards the end of the month and gold has rallied. However, the dollar index still trades comfortably above that 100 level, as you can see on the screen right now. I personally believe we could fall down towards that order block. You can see it around 101 before we move higher, with 104 being a nice target for me. And the dollar is analysed actually every single day in our Discord channel, by the way. So check those comments to join for free. Now, another moving piece of the puzzle is, of course, U.S Treasury Yields. Goes hand in hand, really, with the dollar and Federal Reserve and sort of that chain. The 10-year yield has been falling quite consistently, actually, from the highs at 3.2% and now trades at 2.7%. Still quite high. And just like with the dollar, if yields continue to fall throughout June, then this could be seen as supportive for gold prices. But be sure to measure dollar and yields throughout next month. During the last Federal Reserve meeting minutes, there were no real surprises. It came out yesterday, actually. However, it wasn't really as aggressive as some traders anticipated. Of course, high inflation was discussed at length, and there was confirmation of those 250 basis point interest rate hikes for June and July. This, first of all, ruled out the prospect of 75 basis point hikes, which some traders were calling for. But it also showed the Federal Reserve are willing to wait to see the economic impact first before making any decisions past July. This shows flexibility and, I suppose, installed just a smidgen of calm to the markets. But what side are you on? Was it less hawkish than you thought, or are you on the side of, well, there was no real dovish message here? And for me, I favour the latter. There was no language in there to suggest that the Federal Reserve are going to be blinking as such anytime soon. So I think the fact that we saw potentially some relief from that meeting, I can't see lasting too long. To conclude, I'm just beginning to see more signs that gold can rise. I'm not bullish on gold by any stretch, because I still don't see clear evidence of dovish comments coming out of the Fed. I don't see much changing from a fundamental side this month. While inflation remains high and the calls for the Fed to act more aggressively increase, then I still think gold struggles. However, if there is any indication of relief, and what I would say is it won't take a lot, then gold could surprise investors and perform well in June. So let's have a look at some key levels to watch out for both sides. Okay, so here we are on the chart for gold prices, and these are my drawings that I put on the chart before May's forecast. And as you can see, one of my main plays was I wanted the market to fall down but towards this and fill this market gap we had in here around the 1842 level. We've done this quite comfortably. I'm on the daily chart, by the way. We've done this quite comfortably, so anyone who got in any sell positions and was looking at my target of 1842, well done. You would have smashed to take profit. And to be honest, what we actually ended up doing was going to test the real extreme of this sort of higher low that we had here. So this was actually quite nice support. And that coincides with the fact we had that weaker dollar run. So we've seen gold sort of come and trade back above this market gap that we had. Now, what I found quite interesting was we had this market gap here. We had an initial reaction in for this candle, which for anyone looking to buy gold would have been quite a nice sign. But then, as you can see, we smashed right through it. So I'm quite surprised, to be fair, that we didn't see this candle act as a real resistance level. So I'm looking towards the next candle now. So if I can get rid of this now, because we filled this market gap, so it's now not needed as such. And what I'm looking for now, we don't want them in there either. We've broken this low, which is something else I mentioned. To be fair, I probably should have kept that one in. We have broken this low, which I thought was quite significant because this was quite a important low that we had coming into May. So we've broken this low now. So I do still think technically, at the moment, we're looking sort of for sells. And where am I going to get this sell opportunity from? I like this sort of order block level, this resistance level, potentially including this wick as well, but if we wanted to be a bit safer. I like the idea of potentially selling this market to be quite aggressive from the 1875 level. And if we did have a short position from this level, and anyone who trades sort of break and retest, it is a retest of this market structure we had. And for me, targets down towards this 1787 level. I think we could get a situation where at some point during June we come and form a double bottom here before we move potentially higher. Now if the dollar softens throughout the beginning of June and yields are falling as well, then what I'd actually like to see is gold sort of come and test, oh excuse me, mouse isn't working, come and test this level here. If we can get a test of this market gap that we have in here, and I'll mark that quite clearly as a market gap for you, imbalance, market gap, same thing, then this potentially is a buy-in, take profit, just like we had for do you remember the gap we had for May and that we ended up filling? Let's get rid of this one. This is a potential take profit around this 1926 level and is an area I'd like to sell from as well. If we can get a double bottom form down around this level, I'll be looking for a break of structure around this 1800 level before we get a move potentially up towards this imbalance area at 1920, and I'll be looking to sell down again. If we do get a clean break above and there's no real reaction from this imbalance, again, that says to me that we may be heading towards something like the order block here at 1950 potentially. So we do have different situations for gold right now. So it's going to be a case of being patient. The aggressive trader could take a trade from this order block down at 1870, aiming towards the lows at 1780. From here, I'd like a double bottom to be formed and a move up towards the imbalance area at 1926. We may see a weaker dollar and weaker treasury yields instantly, and we may get a move straight up and fill this imbalance level. So that's they're my two targets for June, the 1926 level and the 1780, 1775 level. If you've enjoyed this video, make sure you've liked and subscribed to the channel. I'm going to provide an update to this as well in our Discord channel, links in the comments, as you all know. Other than that, I do hope everyone has a great trading day. Continue to drop your comments in the comment section. I know gold's got a bit quite different opinions at the moment I'm seeing online and when I do my research. So I'm interested to hear what you think. Other than that, have a great trading day, guys, and I'll catch you all for the next video. Thank you.